All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Interesting market open here this morning. It's one where we woke up and what were bonds doing? Well, bonds were trading up. TLT was trading higher. And while S&P futures hadn't sold off, in fact, they were pretty flat. We've talked about bonds. If bonds are up, market's probably going to fall. We saw, S&P futures kind of fall into the open, and shortly thereafter, if we look here at the S&P futures chart, let's see if it'll bring it up. There we go. You can see this drop, and this is happening here from 6:30 my time. So 8:30 Eastern, down to about 7:45 my time, 9:45 Eastern, where we get this drop of about 25 points, somewhere in that region, and we're bouncing back just modestly here since, but bonds up, market's gonna struggle to gain, a bunch of traction. But we saw yesterday, we saw a shift in the metrics and the internals. And that shift tends to mean what? That shift tends to mean there's going to be more differentiation, more stock picking, a little less volatility. It doesn't mean things are, out of the woods. It's not some sort of magical, all clear signal and everything's just going to go up afterwards. But you can even see in today's action, with the market down now 13 points, the S&P 500 still has 100 gainers on it. And some of these gainers are relatively significant. We have different sectors. We have Raytheon. We have Twitter. This isn't all just one sector. We have Home Depot with earnings. Interesting earnings report, by the way. So that's what we're seeing here this morning in the market. And, I do. Look, when we have a morning where and let's go to Visa, and we'll go and update these in a moment. There's nothing that needs changed. But let's go to Visa. I'm just going to pull up an hourly chart. When we have a morning where the first hour, what do? We break down below the 7-hour moving average, right? What's the tendency? Well, the tendency is that day, it's just not going to be great for the bulls. It doesn't necessarily mean the stock's going to fall off the cliff. It doesn't mean, it's in trouble or anything like that. It just simply is one of those things that when we see it, right, we saw it right back here, we saw it right here. We know that day, the chance of a call position that was entered prior to the open, performing well, that day, it's just not, right? And so you just kind of, it's one of those where, I just kind of look at them when I'm in call positions and they do this of, hey, can it just hold on today? Can it just hold on? If it's able to hold on, generally it's in a pretty good spot, good position. But we saw a lot of stocks do this, where they broke that 7-hour moving average right at the open. And, when it's just one of those where, okay, going to tell me what? It doesn't tell me anything about my position, that it's in trouble or anything like that. But I just lose I lose high expectations for that position for that day. So speaking of positions, let's go and get the values in here. Microsoft, we're down $65 on the position. 278 is the price. While I update these, please note that the challenge spreadsheet link has been changed. The current one will say May 9th, 2019 Algo Challenge 8. And so please update that if you haven't. The link is there in the message feed for you. But let me get this right. 278. And then we have Micron and Visa. All three of our positions right there were down 37 cents. That's pretty eerie. All right. For $4 for Visa and for Micron, we're looking at 262. So 4 and 262. All right, so that leaves us with a measly 120 on Visa, up 500 on Micron, and down $60 on Microsoft. So yeah, we're seeing all three positions, I believe, down here this morning, but still in very good spots. We're not close to any stock exit levels or anything like that. With today kind of being a pause day, we'll see if that kind of ends that way today. There's a long way to go. But with that being the case, it does bring our time stops a little bit more in play. We have seen that, during the course of this challenge. So it'd be nice to get some run up, before those time stops trigger. There are no new signals on the board here this morning. It's one where we do have a bunch of upside crossovers on the watch list. U.S. Steel, Whirlpool, Triple M, Las Vegas Sands, Home Depot, Arconic. So we're seeing more upside crossovers come in, even though the market is down. So we don't see that very often, but we're seeing that today. With the market down, as far as downside crossovers go, here's the list: Honeywell, J&J, and Altria. And all three of these were stocks that had upside crossovers yesterday and failed to have an upside trigger. Honeywell, let me pull it up here. Here's Honeywell. And this one did, yes, it had the upside 3-7 crossover, failed to have an upside trigger to it. J&J, same boat, and now they're, crossing on down. J&J has the potential to trigger bearish here. Honeywell, probably not. But J&J, has that potential. Altria has that potential here as well to trigger bearish here today. So we'll see kind of how that shapes up this afternoon. I don't have the cash for the challenge to go put on a third position, a fourth position. So even if they do signal, unless one of the positions knocks us out, they're not very playable here at this point for the challenge. But we'll see how they kind of see how they play out here the rest of the day. Now, there's an article out there on MarketWatch this morning, and it was sent to me by one of you asking about it, and more specifically, the triple bottom chart pattern. I love chart patterns. Absolutely love chart patterns. It's one of the reasons I got into trading. I love drawing on charts and, just kind of being involved in the technical analysis side, the candlestick patterns. Chart patterns are something that, when I trade, I want to be trading to the upside on a bullish chart pattern. I want to be trading to the downside on a bearish chart pattern. But there's a big argument against any of that kind of stuff. And the argument is mostly academic. And it kind of compares looking at chart patterns to finding patterns in the night sky and then predicting what's going to happen in your life based on the patterns in the night sky, right? So an astrology correlation is oftentimes made. But there are some patterns that when they happen, they're just a little more accurate. And a triple bottom chart pattern is one of them. But when it comes to a triple bottom chart pattern, it's one of those that is just overly analyzed and most of the time wrongly played or wrongly interpreted. And just one of those where, okay, why is it a triple bottom chart? Well, because the double bottom failed. What am I talking about? Let's go take a look. Let's just come in here to the S&P, and I'm going to come into a 1-hour chart, and we're going to see this pullback, right? This pullback that the market has had, and we have this big drop, right? And the market finds a bottom right here, and then the next day comes and tests that, right? And so what do we have? We have a double bottom chart pattern. Okay, right? Technicians will take a look at the middle of this, where this kind of resistance level is, and say, okay, if that breaks, all clear for the bulls. The bottom is in, and off we go, right? And yeah, we get a gap up, and here we go, and it's going to go. We come back, we even retest it, right? We retest this kind of breakout level. Boom, off we go. It is all clear, sailing. No. Our double bottom is now, instead of, hey, you know what? Double bottom didn't really work. Now we're going to call it a triple bottom, right? And if the triple bottom doesn't work, we're going to call it a quadruple bottom. And if the quadruple bottom doesn't work, we're going to call it a multiple bottom volume. It's just one of those where there are some basic principles, but playing it is a lot more ambiguous in real time than what it is looking at it in hindsight and going and finding charts that magically had triple bottom patterns. This is the case with all chart patterns, but one of the things about a triple bottom, if used correctly, it's one of the more accurate ones. Depending on which service you're looking at that goes out and analyzes this type of thing and looks at the data, gives probabilities and percentages, it's between 70 and 80% accurate. Okay, but what do you need for a triple bottom? Because this is not a triple bottom. The only thing triple bottom about this chart pattern is the fact that it's retested this low 3 times. That's the triple bottom part. But for a triple bottom pattern to be confirmed, there needs to be an upside, right? And you know what? Magically, what do we have here? We have a triple top. Okay. Yeah, and you find this is very common when it comes to chart patterns, where you're going to have the bullish iteration and the bearish iteration in the same chart, and it's just kind of waiting for a break. For a triple chart bottom breakout to occur, we need to clear this resistance area. Okay. Upon clearing the resistance area, the price target becomes the distance between the resistance area and the support area, right? So in this case, we're talking about 282 to 293. We're talking about 11 points. So we're talking about somewhere around 304 as the price target here on the S&P. That's all well and good, right? That's all well and good. All right, you just wait for the breakout. Breakout happens, you chase into it, and off you go. Okay, I could buy that. But one of the things one of the big tendencies is we tend not to see these go from bottom to top and then just break out. We tend to see them go from bottom to top and then a little bit of pullback and then break out. That's what we tend to see with them. But when they do break out, they're very accurate. They're very solid in that regard. But not all triple bottoms are made the same. One thing that for me, I have to see, if I'm going to call anything a triple bottom, I have to see positive divergence within the momentum indicators. Let's put 2 of them on. Let's go with the MACD and let's go with rate of change. Okay? And what do I mean by positive divergence? I simply mean that I need to see that the indicator is rising at these lows. Right? So here we are at the low, the first low, and the MACD is down here at -4. The next low, the MACD is at -2.5. Okay, great. You know what? We're retesting the same level, MACD ultimately moving higher. Then we come down to our triple. All right, I need to see the MACD is higher, and yeah, it's 1.5, right? So we have this positive divergence element coming into play with this momentum oscillator. Okay, that is one of the characteristics that is absolutely necessary to see a triple bottom breakout here to the upside, and you can apply it the same way. If you're going to call this a triple top, you need to see negative divergence come in, right? And there is no negative divergence within the MACD. The MACD, every time we've come up to the top, the MACD is just a little bit higher, except for this middle one. But, we don't have the same, the opposite element to what we have here on the bottom. What about the rate of change? Do we have positive divergence? Well, here's the low. Okay, then this low, all right, then this low, okay. It's not the greatest, right? It's a little bit mixed, but our recent highs, has created a higher high here. It's okay. It's not picture perfect like the MACD is, and you'll see that here when it comes to momentum oscillators. So we have a really nice triple bottom chart pattern. It's really good, right? Wrong. I'd say this is absolutely irrelevant in every way, shape, and form. I don't care about this chart pattern at all. It means diddly squat to me. Why? Because it's on the index. It's on the S&P index. And when it comes to short-term chart patterns on the S&P index, they are incredibly inaccurate. When it comes to short-term chart patterns on individual stocks, now you get some accuracy. But when it comes to an index is a group of stocks. Are money managers putting money into play based on a triple bottom chart pattern? Not at all. Absolutely not. Yes, Trader John may be doing that, sure, but the market moving money is not doing that at all. And so to say, hey, you know what, this chart pattern, blah, 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 and when you look at the arguments between market technicians and academics are typically measuring a lot of the stuff on these chart indexes and saying, come on, your chart pattern, your candlestick analysis, it's meaningless. And they have a point because they are looking at indexes. When they get into individual stocks, the story changes. There is some accuracy. The technicians, in my opinion, have the absolute advantage. But when it comes to indexes, it's hogwash, right? You look at the incentives, you look at what's driving money in or money out, right? It's not based on chart patterns. But we can go a step further. Sure, the S&P has this pattern forming, but what about the IWM? Small caps. Wait, we set a new low here. Does that mean that this is no longer bullish and we're going to see the S&P rally and we're going to see small caps break down? I mean, lower highs, lower lows. I mean, market technicians are going to come into this and say, look, this is a very bearish pattern. We're at least going to come back and test 147, the midpoint of this channel. Right? I mean, it's one of those where we just flip the index a little bit and we get a different picture. You say, well, small caps, large caps, they differ a lot. Well, you know what? We have the same picture here with the Dow Jones. Looks like the Dow Jones Industrial Average looks more like the IWM. You say, well, okay, they're close enough. All right, they're close. Okay, well, let's go to emerging markets. Do we have the same thing? Well, similar, right? What about the Dow Jones World Index? Let's take the whole world. I mean, we're a global market nowadays. Does this look the same as the S&P? No. And so what you find is when you're analyzing chart patterns on an index, you don't have to change up the index very much to see a different pattern or to see that your pattern doesn't matter. It's not in play, right? And so chart patterns on indexes have a lot of flaws. They're yes, they happen. Yes, we can see them. Yes, when they work, do people write about it and say, yeah, see, duh, it looked like that. Of course it was going up, or of course it was going down. Absolutely. But in real time using of chart patterns on indexes, it's a wish-washy kind of chop back and forth. Yep, sometimes it works, sometimes it doesn't. And there's just not the same level of accuracy as there is when it comes to individual stocks. When it comes to individual stocks, it's much more meaningful because you have the individual stock story. You have the individual, yes, it is affected by the indexes, but you can have fund manager Joe only putting in a little bit of money into the market, but putting a bit of money into a specific stock, and so you tend to get better chart patterns, more reliable chart patterns that move up to price targets a lot better. So when I look at the triple bottom chart on the S&P, I say, oh, who cares? Who cares? That's not something I'm going to use for a bullish argument. It doesn't hold any water. If that is an individual stock, if it's AT&T, yeah, great. If it's Apple, yep, fine. If it's Micron, fine. I'll look at it, and yes, I will have a bullish bias. I'll be waiting for that breakout and wanting to play that. But because it's an index, I go next. Who cares? And when you see on a lot of the websites, the big news sites like a Market Watch, and when you see them talk about chart patterns, which is relatively rare, they don't do it all that often. I don't see it on here right now. But it's just one of those where normally they're using the indexes, right? They're just using the indexes. And if you go and you track it over the course of a year, you're just going to see that it's not all that effective. It's definitely not something that I would put in the highly tradable category for that individual stock or something that I would use. It doesn't mean that it's not bullish, right? The fact that I'm throwing cold water on the triple bottom chart pattern on the S&P, it doesn't mean it's not bullish, and it doesn't mean it's not going to break out. It doesn't mean it's not going to go hit its price target. What I'm saying is it's absolutely not going to do it because of the triple bottom, and it's one of those where this is more coincidence than anything else. And some technicians will disagree with me with that, and I get where they're coming from, but I've never seen data to suggest that the chart patterns, the shorter term chart patterns on the market, are very reliable. I do disagree with that statement I just made when it comes to the longer term patterns of the market. When it comes to a monthly or weekly chart, I think you find a little more accuracy. I think you find a little more, overall economic and earnings trend type elements here. When it comes to patterns and formations, on longer term markets, but the shorter term, the daily, hourly, pretty meaningless and pretty coincidental. At least the way that I go and look at that. All right. All right, thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here this afternoon. I will talk to you then. Take care.